Hey Fox friends, how's it going? And happy crazy market to you. I guess we can get kicked off now. Probably have a few more stragglers, but we have quite a lot to cover today. Take a look at the agenda I posted on the stage chat. Can dig right in. So yeah, this particular chat comes at a time of market clusterfuckery. Things have been pretty ugly. This happens in crypto. It was, crashes are a matter of when and not if. This has happened many times. This is precisely, why we're, pursuing different routes for stablecoin exposure. And just one thing to emphasize: if this is your first crash, things can seem very dire and just generally, shitty. People get negative. Your own, personal net worth may be declining at a rapid pace. It seems like what was the wave of the future is now like, everybody's giving up on it. You see negative, ridiculously negative articles in the media. Bitcoin's dead again, or blah blah blah. That's all bullshit. The fact is, bear markets. I can attest to this myself, having been through a few cycles, and others here could as well. Bear markets are the best time to build. There's a certain focus that comes with like price dropping, where you just kind of put your head down and start to really focus on building products that people want to use. The mainstream users are coming. This is inevitable, and I personally think, okay, if we are in a bear market, it will not be as bad because there's more adoption. Hold on one second. I'm gonna kick my cat out, guys. Ming says it's actually a cat market, not a bear market. So just, stay positive. Things are going to be okay. Of course, we do have to maintain enough or diversify and hedge our treasury so we can survive potentially a long bear market. Also, just for a little more insight into what's going on in the macro situation, there was a really good podcast recently on Bankless with Jim Bianco. He is a sort of TradFi economist / kind of investor type that is also very crypto native. And he does a wonderful job in this podcast of explaining some of the dynamics that are causing this to happen. When people are saying, well, okay, why, might be wondering, well, what does the Fed have to do with crypto selling off, and how does this all relate? It's a super interesting listen and super insightful. So give that a listen. So let's see here. Yeah, this could just be a buffalo market where we kind of meander around. I will say this: if we are in a bear market, it was a very unusual top. Typically, especially in crypto, a bear market is preceded by a blow-off top where prices are going parabolic. We didn't see that this time. Also, you have other, like, individual assets have recently hit all-time highs, like on the Cosmos side, for example. So it's not typical. On the other hand, we have a lot of headwinds, whether it's like geopolitical stuff with Ukraine, it's the Fed, it's regulatory. So those are risks. Anyway, so amidst this market weakness, from a tokenomics perspective, this is part of why tokenomics is here, to manage these types of situations and mitigate the risks. The number one thing we want to avoid, beyond all else, the ultimate unforced error we can make, is getting liquidated on our RARI loans. That would be a super amateur mistake, and we're not going to let that happen. So yesterday, we added more collateral, and thank you to the multi-sig guys that made this happen, but we've added more Fox to our RARI Fuse loan. Specifically, that's the FAY that we pulled out for payroll a few times. That loan is safe all the way down to 6.5 cents. So that, to me, even in this crazy market, feels pretty damn safe. If we do decline more, say 50% from here, We can always add more. There's not much opportunity cost to adding more Fox because we just have this in our treasury. There is a risk, I suppose, of a smart contract risk, but that feels managed. So yeah, just be aware that we're watching that very closely, and we're not about to get liquidated. Stablecoin wise, currently the main avenue by which we're generating stablecoins and getting exposure is with our Fox to USDC bond. I won't harp on that too much because we just talked about this in TMDC. TLDR on that is we are planning on extending that bond another few months, and pending TMDC approval, actually increasing that bond amount from 2 million to 3 million a month. So I can't understate I can't overstate the importance of this. So currently we're bringing in about 66K worth of USDC a day to our treasury via this. And if this continues with 3 million, we'll be bringing in 100K a day. And that's huge. Over 5 days, that's enough money or USDC to fund 1 month of operation for us. So we're going to continue to push ahead on that. In terms of other options, somebody raised the prospect of us selling like Toke. Specifically, I don't think that would make a big difference right now. We have, I think, less than like 300K worth of Toke. It is worth mentioning, though, that it is a volatile asset, just like Fox, and it's going to be heavily correlated to Fox because it's just another crypto asset. So it's nothing we would want to hold on to for hedging purposes. But given the fact that it's not going to move the needle too much, and additionally, there's some huge benefits of owning Toke, not just price appreciation, but it gives us the ability to direct liquidity. And as Willie recently posted in Tokenomics, there's some cool new features that they've added in their updated interface for doing that, new abilities, Toke superpowers. In my opinion, it wouldn't be worth selling Toke for USDC right now, but it certainly, potentially could be an option in the future. Also, the idea of budget austerity was raised. I think this is definitely something to keep in mind in the event that things worsen. Part of the goal of raising stablecoins is to reduce the need for budget cuts if we're in a long-term bear market. We would like to ideally continue with what we're doing. Of course, if things don't work out to that extent, then there is always that prospect. We've seen some other DAOs do that, but I don't think that's a measure we have to take in the near term. The main focus right now, I think, is just getting that stablecoin exposure. So let's see. I'll pause for a second, catch my breath, see if anybody has any thoughts in the chat. F in the chat, guys.
Hey, Kent.
Hi, Josh.
Hey, so I was just curious, I appreciate all these thoughts about things. The thing that's the most immediate need we're going to have, which is still a ways away, a couple weeks, but is payroll in February, right? We need to have, and what is the total amount of payroll between all the work streams? I'm not sure, but here's Willie. I'm looking at the Treasury, and it looks like we currently have almost $500,000 in USDC. Do you think we just plan on spending that and not having to make another loan from the Rari pool or pull more credit from the Rari pool?
That's a great question. I mean, with Fox declining, if it continues to decline, I think it becomes more tempting to take some of that USDC at least. It could be a half and half proposition. It's not mutually exclusive, but that's a good question to start to ponder now. And correct me if I'm wrong, Willie, but I think payroll, at least for January, was something on the order of 550K, and I think it'll be similar for Feb.
Yeah, it ended up being 454 of stable coins and then 42K. So 450K worth of stables and then about 50K worth of Fox. That was a little bit lower than anticipated because the engineering work stream took a lower budget. And I think they're going to take a slightly higher budget this next month. But also security work stream had some funds up front. their budget was a little bit front loaded, so their expense will be later or be lower in the coming months. So yeah, I think it's safe to assume that for February, I had to run the numbers, but it should be under 500K for all the work streams. And we actually have 200,000 USDC currently in Colony. That's more than I thought we had in Colony. We have 200K.
Oh, we have 200K USDC just in Colony. That's not in the wallet here.
That's right. And so that's going for this next month. What we did is we took all the leftover funds from the past budget cycles for the work streams that are now in their second budget cycle, and we moved that to Root. And the plan for this next month is to pull from that before we pull from the DAO Treasury. So I think for this next month, we should need less than 300K stables from the DAO's Treasury. And yeah, to your point, Josh, we actually have over 500K if you take into account not just our USDC, but our UST balances as well.
Where do we see with it was 500 last payroll. Was all that distributed via Colony? Like, I'm just curious where we can see a report of which work streams or like what tools. Was that all people? Is there a way we can see that?
Yeah, I posted the spreadsheet that all of the workstream leaders have access to for tracking like how much their budget is every month, how much they receive. Then in terms of tracking like what happens afterwards, that part is up to the workstream leader to track like how.
Yeah, that's okay. I'm just looking for the work. Okay, I remember that. Okay, cool.
So if you add all this up, that's great to know about Colony. So 200K in Colony. I'm looking at Zapper right now in our just regular on-chain treasury. We have nearly 489. We'll round it up. So there's 700 right there. And Willie, do you know, as we accrue that USDC via the bond, is that streaming directly into the treasury, or is there unaccrued or unclaimed USDC that we still need to pull out of that bond?
Great point. There's definitely some unclaimed USDC that we need to pull. Let me find out how much that is. But it's going to be
it's quite a bit. I mean, you're over 660K on the bond, and that will, by the time we need it for payroll next month, it'll be obviously higher than that. So, I mean, if we're only talking 300K needed, I don't see any reason that can't just be paid straight out of the treasury via the stables.
Yes.
Yeah.
And we have 389,000 that is currently claimable from the USDC from the bond contract. And that
this is music to my ears, guys. And just to give some perspective, we kind of set the goal of having, given a protracted bear market, having a goal of 10 million in stables. But this is still a vast improvement based on where we were, which is essentially no stables. So yeah, this is progress. Never Was is asking, are we in a rush to spend our stable coin that we've collected to insulate us from potential risk? Yeah, I mean, I think it's like having that is definitely good. To John's point, if we have this on hand, it's, this is why we have stable coins. There may be uses for stable coins, like from a growth perspective, above and beyond what we want to have for payroll. But I would hesitate to use that for growth purposes before we have enough, just general stablecoin exposure. So, gosh, if you add everything up, we are looking at over 1 million now of USDC, and this amount should accelerate or increase if we increase our bond. To be very clear, guys, we're nowhere near where we need to be. So this is why we're working on other efforts to raise stables, success token, and trying to find OTC investors. But this is progress, and we're going to keep pushing it on this front. In terms of taking out another loan, I mean, the downside there is like, okay, if price keeps declining, then we're just shoveling in more and more Fox to avoid a collateralization event or getting called out on our collateral. Sorry to interrupt. Was that you, John?
Yeah, I was just going to say that at this point, compared to where we were last month, where we needed to take the loan because it was the most efficient way to get stables, by the time you need to run payroll next month, the DAO can basically pay all of its payroll and stables if it wants to. It's still a TMDC decision, and not have to take any additional debt, and still have a surplus of stables that is starting to stack and build via the USDC bond and other things it's trying to do. So even though we're not where we need to be, much better position right now than we were even a month ago.
That actually raises an interesting point. Is right now we are paying in USDC. I think it makes for a better UX with community members that are getting paid. It also, of course, there's no Fox that is getting dumped on the. I don't want to say dumped, but it's sold on the broader market because people need to raise stables. Instead, they're getting paid in stables. But one option we could choose in the future, if we're still feeling insecure in our stable treasury, is to switch back to paying in Fox. Of course, that does introduce price pressure. So it's a bit of a trade-off, but something to keep in mind.
Also, something I wanted to mention too, from chatting with the Ichi team this past week, as we do have some stable coins that are just sitting idly in our treasury, we can consider putting them into DeFi strategies. And one DeFi strategy that we can do that would also support this upcoming Angel Vault, Ichi team was recommending that we take some of our stablecoin balances and add liquidity to the one Fox USDC pool on Uniswap v3. That will help the Angel Vault function better. It'll be easier for people to arbitrage it when there's a large pool available for one Fox liquidity. So we could take, and the cool thing about one Fox is that, if we wanted to do 500K worth of, add 500K worth of liquidity, we could take 450K of our stables and 50K of Fox, and then add that liquidity to the pool. It's a very safe strategy, and will generate pretty good yield from fees. The one Fox treasury is already generating thousands of dollars of fees just from the 500K of one Fox USDC that it has deposited.
So yeah, Willie, can we talk about the specific risks here? It does sound safe. Generally, the way I've been thinking about this is USDC that we're accumulating for hedging purposes, and paying payroll down the road is sacrosanct. In other words, we just keep that in our wallet. It's boring, but it just sits there. But it's also 100% safe, disregarding any sort of like stablecoin specific clusterfuck, like USDC blacklists everything or whatever. However, in this case, are you describing a scenario of just like a deposit into Uniswap v3 pool?
Yeah, and specifically taking some USDC, using it, half of it, a little less than half, to mint one Fox, because then we'll also use some Fox, and then depositing USDC and one Fox into the Uniswap v3 pool. Let me see if I can find our current position that the one Fox treasury holds, and you can see the fees that it has generated. And that's all. And that's the fees that it's generated currently, just from people who want to acquire one Fox. Once we launch this Angel Vault, there'll be far more volume going through that pool. So the fees generated should be pretty substantial. And yeah, really the risk that we're taking on is the Uniswap v3 risk, which is probably about as low contract risk as you get out there. And then the one Fox contract risk, which I think is mitigated because the DAO ultimately controls that treasury, unless there's some black swan contract bug that hasn't been discovered yet.
Man, if Uniswap gets hacked, we all have bigger problems. Crypto is an industry, the ETH space, it would be an ugly day. But that's a very battle-tested contract. Mm-hmm. And to review, you're positing that we maybe use like 500K USDC for this strategy, something like that.
Yeah. 500K was the recommended amount. That would put the pool in a really good position, and that would take us 450K of our USDC, 50K of Fox to get there. Okay,
and just to reiterate, the specific benefits or potential rewards of doing so, could you just underscore those again?
Yes. The benefit to the DAO, the direct benefit is that it will earn trading fees, which should be, single-digit APR, possibly double-digit APR. I think, the HT would know better, but I think it's actually a good chance that it'll be double-digit APR just from that LP. And then also it supports the Angel Vault, and it will make the Angel Vault function better, because in order to ARB, people need to be able to get one Fox. They need to be able to go both ways. And the ARB bots aren't aware of how to mint one Fox. So the more liquidity there's on DEXs, the better the ARB bots, the more liquidity the ARB bots will have access to. And it'll basically just help the Angel Vault function better. There's
kind of two-pronged benefits with that. That's pretty compelling. On Related question: so Angel Vault? Initially I was thinking, Fox is outperforming ETH. Maybe that's the Angel Vault kicking in, but Angel Vault is not quite live yet. Is that correct?
Correct. I wish that Angel Vault was live. I wonder how things would look if we had the Angel Vault live for the past month. But undoubtedly, Fox price would arguably be much higher. Yeah.
Cool. And do you? It sounds like with this strategy. Let's see. Is this a strategy that we can just enact? Does it need a TMDC vote?
It's been approved. The holdup was a lot of transactions needed to get the $2 million of one Fox liquidity to kickstart the vault. We have secured that. That's ready to go. Also, part of the proposal was to launch a farming program to incentivize staking Angel Vault LP tokens to earn Fox. Mr. Nerdhair has been auditing that contract to make sure it's all good because we're going to be using Ichi's contract there. And I think we're really close. I know has actively been working on that this week. And let me see if there's any updates. So yeah, hopefully we'll be able to share a date very soon. Imminently when this will finally be going live. We're working through the final blockers to launching this.
One thing I just want to note about the Angel Vault is it's not the Angel Vault alone that will help give that a more stable price floor for the token. It needs to have liquidity added. So once we get it going, it should have some impact, but you won't really see it help until we get the liquidity in the pool that Willie's talking about using our funds for, and then the rewards program to draw more people to deposit in there. So the more that gets, the more liquidity we get in there, then it really starts to help create that token floor, or at least that's what we saw with the Ichi token. And then I just wanted to throw out another thing. I mean, I think it's a good thing, and because we would also earn fees, so we would get some APR, APY, I can't remember which is which, but we would get some from that. The other thing to consider with USDC is that I was trying to pull up the Fuse Pool 79, but I can't get it to load. We're paying a pretty penny to borrow that FEI. So we could turn USDC into FEI and pay down some of that loan, even if we're then going to borrow it again in 2 months or whatever. That interest for 2 months would be some money saved. I do think it would be better to deposit into the liquidity pool and gain some fees. I don't know if we would gain as much fees as we would save from not paying as much interest, but it does also provide the function of supporting the Angel Vault.
Yeah, and that's maybe a disincentive to taking further loans, at least large loans via Fuse. I don't know what exactly those monthly costs come out to now, but they, it adds up. As far as paying down current loans, as we build up more stable reserves, maybe that does, it kind of becomes a trade-off. Okay, if we pay this off now, what are the cost benefits of that? That would be interesting to analyze. Just really quantifying what are the current costs of borrowing versus, of course, just as we accumulate our stables and using those in other ways.
Yeah, I think that's a good thing for TMTC to consider. Is again, I think we're going to have more than enough stables to at least cover payroll and still have a surplus, and to be starting to stack stables this next month, which is great, especially if the bond is renewed, as I expect it will be. At the same time, you could always just pay off small bits of that, and it would more than easily cover that interest if you even just paid off, 50 or 100K for a few months. Another thing to consider, though, is that Turbo, that the new FEI offering, is probably going to come online, hopefully within the next 30 to 60 days. So maybe as soon as sometime next month. Wouldn't surprise me if they tried to have it up or, very soon after ETH Denver. If that happens, then the cost of borrowing FEI could drop dramatically if the DAO engages basically in using Turbo and supplying a bunch more FEI to the pool. I know we haven't talked about that a ton in these meetings, but it is pretty public knowledge now that we could drive the cost of borrowing Fay to near zero or to single-digit percentages once Turbo comes online.
Yeah, that's super compelling. Well, so we would have our existing borrowing costs via our sort of regular plain vanilla Fuse loans. Perhaps we draw or we pay those off, and then for future loans, once Turbo is available, we just resort to this, effectively zero interest approach. Which, my God, that sounds incredible.
And we could even borrow.
Well, it wouldn't be zero.
Yeah, go ahead. We could borrow Fay at like very low APR, and then use that to pay off our expensive APR loan.
Yeah, well, to be clear, the way this would work, as my understanding of Turbo, is you wouldn't be able to actually borrow at zero and use that at zero. But what we would do is you could basically deposit Fox, mint Fay at 0%, but you have to then deposit it to another pool. So what you would do is you would deposit it to the Fox and Friends pool. But we could basically, the DAO could basically mint, say $5 or $10 million worth of Fay, whatever we want, at 0%, deposit that into the Fox and Friends pool, basically driving that interest rate down considerably, to the 2 or 3 or very low percentages. Then anything that is borrowed, the DAO is actually earning interest on that borrow too. So it would actually drive it down in 2 ways. One, you create a bunch of new Fay for the pool that drives the borrowing down for anyone who wants it, including the DAO. But 2, anyone that does borrow, then that's actually a deposit from the DAO. So the DAO is now earning interest on its 0% loan in addition. So it really drives the cost down considerably when you think about it that way.
That's cool. And I think it should be, we'll see what the final numbers look like once it's live, but I think it should, that whatever that percent ends up working out to, it will probably be lower than the yield that we'd be able to generate on those assets in a pretty low risk way. So I do think that, to the earlier question of should we pay off this loan, I do think that maybe with Turbo coming soon, we can leave this loan and just look at ways we can earn yield on our stables.
Hey, and
Awesome.
cool. I got another question in this category of things when you're talking about budget and having enough to pay for the budget. So we're looking at expanding the engineering budget like significantly, right? By hiring more developers and getting our wages to competitive market wages. So does anybody think that we should not hire developers because of market conditions?
I would want to just get a sense of what do we project for what those might add up to. I mean, we need. And I'm just riffing here in my own personal humble opinion, but like we need that talent. But getting a sense for this is going to be probably significantly more than what our monthly outlay right now. Just having a projection of what that might look like would certainly be helpful.
Yep. We've almost got that together too. Okay. Yeah, that's a good point. It's a hard decision to make without any kind of numbers yet.
$1 billion.
I don't see any reason not to still expand that. And also that cost only comes in once there are new developers to hire. So a budget to hire developers is one thing. You don't actually feel the budget until those developers are hired and hopefully they're producing. But hopefully that will be outlined in the engineering proposal that's going to come and then be discussed ahead of that.
Yeah. Okay.
Hey, Danielle.
Hey guys, I wouldn't let the market really slow our growth. I think we can prepare for the next bull run now if this is a long-term bear market or anything, and then really capture that later. So I think it's a good use of our Fox at any market to continue building our team for growth. That's how I would look at it.
Invest in ourselves. I agree.
If anything, it's just another, knowing that this higher payroll is likely coming is an argument for increasing our Olympus bond to 3 million. Just let's stack those stables right now because we know the expenses will likely increase. But yeah, bear markets are for building for sure.
I think
agreed.
We should look at our revenues too at some point. This draft spreadsheet for DAO revenues. And I think it's important to understand, how much we're bringing in every month and how much we're spending. Because I do think, as long as, if we could stay profitable, then, we should absolutely be investing in growth, especially when we have this big balance sheet.
So just to give like a little perspective, because James and DeFi and I have been working on the budget. It looks like it would about if we were to hire 4 more engineers, right? And to John's point, that would not start on March 1st. But if we got to the point where we had 4 more engineers, we would be roughly doubling the budget from about 121 for engineering, from 121,000 a month to around 240 per month. So talking about an additional 140,000 per month, which is
that's actually less than I thought. Imagine
doesn't
just more engineers.
that doesn't seem to be at all.
okay. Good. That's exactly the kind of initial kind of gut reaction I was looking for.
Neverwas points out there are a few work streams that are coming up for renewal that may need larger budgets. Only 2 have been renewed so far. So knowing that, ideally we want to be able to continue to grow in these various ways. But I think the largest of all those expenses would probably be adding more devs. Devs are not cheap. So, even with 4 more engineers, okay, that's an extra 120K. That sounds very doable. So thanks for pointing that out, Josh.
Thanks for having the discussion.
I want to move it along here. We have a lot else to cover. So it's crazy. So much is going on that we've talked about all this stuff, and we haven't even talked about the proposal that passed recently. This was the liquidity mining and LP token buyback proposal. Pretty cool. It went from, just a very kind of conceptual idea in John's head to being kind of refined by the community and the tokenomics work stream, and now it's passed. It is part of the DAO's law, so to speak. It's been passed. Okay, so here's the thing. I'm not going to spend time really rehashing what it is. You guys are probably familiar with it. It's our new liquidity mining phase, accompanied by aggressive LP token buybacks in our Olympus bond, Fox to ETH bond. The question now, and we don't have to really go down this rabbit hole now, the beauty of the fact that we've done this already is we have, roughly a month to figure out what next. So now that this strategy has been approved, how do we implement it wisely? What do we need to keep an eye on? So, certain things to keep in mind would include, just like tactically, like how do we kick this off? How do we begin to implement these LP purchases? The general thought was to front load this so we're aggressively buying back our own liquidity initially, quickly owning a lot of our own liquidity. But at the same time, I think we need to quantify, like, okay, what would be some signs that maybe this is creating unwanted effects in the market? Maybe there is, I don't think that's likely, but like, what would be some indications that maybe this strategy is creating unwanted effects? What important metrics would we be watching in addition to obvious things like total amount of liquidity generated? But we have a month to really start like carefully craft this strategy, and that's a lot of time in crypto. It's kind of a luxury. So I'm looking forward to everybody putting their heads together and kind of figuring this out. On the liquidity mining side, I don't think there's a ton of considerations because it's sort of like continuing what we're doing now. But John, Willie, anybody else that's kind of had visibility on this, curious to get your thoughts as well.
Hello again. I have, so in general, I'm glad this proposal passed. I have I just won't ask the questions right now. We can debate anything about the tokenomics of the proposal, but I have some implementation questions because there's engineering effort with the new staking contract, and I just want to understand some about the timing, but I will hold first. I just wanted to put a placeholder that I'd like some info about that.
Yeah,
cool.
I think it's a really good thing to keep an eye on, just as stock to flow ratio. I thought a good place to start would be just putting together all of these different major sources of Fox issuance. And right now, that's like obviously the liquidity mining and the bond program. Those are the primary ways that we are basically taking Fox that is otherwise locked away. It's not part of the currently circulating supply, and introducing it to the circulating supply. Another question related to that is just figuring out what do we want to use as our circulating supply, because the number on CoinGecko, that's a circulating supply, but I know right now all of the Fox, that's the Tokamak reactor, that is currently included in the circulating supply, but it really isn't. I wouldn't necessarily consider it circulating right now, although that will change once once the liquidity allocation goes live and the liquidity in those reactors actually is deployed to DEXs. But I think those are the two big things to figure out. Is like, what's our accurate circulating supply number? We can start by just using the number on CoinGecko, but I think that's probably an overestimate. And then how much Fox are we introducing to the market each month? And then I really like Josh's suggestion too, that if we are making a new proposal in the future that will increase that Fox issuance significantly, we should include in the proposal how it will affect that stock to flow ratio. I think that's a good place to start. What do you guys think about that?
Yeah, those are important metrics. An interesting question is like, what sort of actionable or what sort of actions might we take as a result of looking at this number? One would be, kind of to your point, like if we're increasing the stock too much, i.e. introducing too much Fox via all these efforts, maybe that would be a reason to, or an indication that we need to slow down. Although it's a little bit arbitrary, without like historically knowing what these figures are, it's a little bit tricky. But just to start tracking that is really important, and also just visualizing. Okay, Fox is entering the market via these different routes: the bond program, liquidity mining, XYZ, or whatever other efforts we have. And then circulating supply is just, that's a very good broad tokenomics type thing to know. And it's a little bit tricky because it's like other people might have various definitions, but I think we can create a very good, up-to-date, accurate metric on that.
Well said. Yeah, I think in terms of like how the value that it would provide is, it would just help us make more informed decisions. And issuing Fox isn't inherently evil by any means. In fact, when done strategically, it makes a lot of sense. And so that's kind of the questions that we need to make. Like, obviously, there's benefits to, if we can decrease the Fox stock to flow ratio, that will decrease potential. That should decrease Fox sell pressure. But there's if with the bond programs and stuff, if we're using that Fox and it's bringing in stable coins into the Treasury, that can help us survive a bear market. That could very well strategically be worth it. So I think those are the questions we need to ask ourselves. And especially like if we do, I think the bond programs and the liquidity mining are going to be the biggest sources of issuance. The liquidity mining is going to be pretty much set in place once it's the reward amount, once it's live, although we're going to try and claw back as much as we can. And then the bond program, that's one thing that we will be able to tweak. And so we should just keep an eye on that. And if what Tex was warning against was like, after you go past 10% inflation, then from what they've seen, it's just down only price is what you should expect. We're not anywhere near there, but it'd be good. I don't know where we are, and it'd be good to know what that exact percentage is. And then, if we want to, potentially we might decide that it makes sense to either accelerate or slow down the bond program based on what Fox price is doing and what our stock to flow ratio is.
It's good to know, like if you look ahead, even the liquidity mining is certainly the largest, at least at the moment, disregarding our bond activities that might accelerate. Right now we're adding a lot of Fox to the market via that route, but that will get wound down substantially after the end of the upcoming liquidity mining phase. It occurs to me, I don't recall time blocking the proposal. When are we envisioning that the subsequent phase will end? In other words, like I think the last one was that like a 3 or 4 month phase.
The last one was 4.5 months.
4.5 months, right? So another 4.5 months. Gosh, I'll have to go back. I hope I time blocked that proposal. That's an important thing to consider. Like, okay, when does this end? I wasn't around for the implementation of that. Sorry, go ahead.
You're right, and it's an additional 4.5 months for this next program.
Okay, great. I was not around for the the advent of the last phase. What was I've actually been curious about this. What was the thought process with 4.5 months? Did that just wind us up evenly at the end of the month, or was there a reason for doing like 4.5?
Yeah, kind of looking back to where we were at the time, we knew we needed to extend the program, and the question was how long. I know one consideration was that we wanted to do it long enough so that we could make a educated decision about the next round and buy some time, because like at the time we didn't know what if there would be a third round, what it would look like, if it would be on Uniswap 2, or maybe we decided to do it on Uniswap 3 or some brand new DEX protocol that had popped up. Maybe some of this liquidity mining 2.0 stuff would have matured enough that, which it has, so that we could use that to inform whether or not we should, or how we should continue this program. So those were kind of the main decisions. We didn't want it to go on for too long, but we wanted to buy us enough time to potentially evolve the liquidity mining program for this third round.
Cool. Thanks for that context and background. It's going to be really, really cool to see just over time, and really potentially very quickly, us starting to own a good chunk of our own liquidity. It's really going to put the DAO more in that sort of beautiful DeFi 2.0 camp of, we're not playing by these old or employing these maybe older strategies now that maybe aren't as good from a tokenomics perspective. So let's see. I'm just going to give one more quick update on bounties, and then Willie, if you don't mind staying up here, because then we have this. There's multiple things that you wanted to chat about here. Thank you for joining, John. I appreciate it. Enjoy maybe a drink afterwards. Okay, so on the bounty front, we're trying to get a Fox listed on Aave and Compound. We have submitted a proposal created by Val the Dad on Aave. This is just a draft process. It appears that the next step is to actually do a snapshot, like a kind of I would call it like a casual snapshot, where it's not like actually getting voted on by the community directly to add it, but more of like a, kind of the equivalent of our ideation process. I want to make sure we're very buttoned down on this, so I actually pinged the Aave Discord today, waiting to see next steps on that. We're also continuing to work on the Compound stuff. One interesting thing here is if you dig into those proposals, they both ask for very specific parameters, like I think like collateral factor and borrowing rates, and it gets a little bit technical. This is beyond my purview, as I believe, as well as Val, who has been working on writing these. With that in mind, I asked Decentralized J to assist with kind of at least coming up with some numbers that we could suggest to the community. I want to make sure we're buttoned down on these. So thank you, Jay, for agreeing to help with that. So we'll continue to attack those over the next week. And on to the next slide. So yeah, Will, you had a bunch of stuff, interesting things to talk about. Success token is super exciting, again, because that's a way to get stablecoin exposure, and it's a great potential win-win for investors. So yeah, I'll hand it over to you to talk about this stuff.
Cool. Do we have a Zoom link, by the way?
Sorry, do we have a what?
A Zoom link?
I don't usually use Zooms for these. GK, do we have a Zoom? I bet maybe we could get one created really quick.
Cool. It'd be great if we could have a Zoom link. Yeah, one thing, Kent, and it's probably too long of a discussion for this, but was chatting with a very cool VC firm that the Jack from Murray introduced us to. They are pretty interested, and but I was looking at the success token numbers, because we're kind of showing them these two options with success token, or just taking the same terms we have from that index co-op deal for slightly discounted, slight discounts in the Fox price for tokens that stream over 2 years. And I think we might need to go with the current Fox price. We probably need to go back and revisit those success token numbers. The strike price was currently at $1, and the expiration date. We also heard that potentially. I'll share my screen. Wants to follow along. This might make it a little easier to understand.
$1 is pretty damn out of the money right now.
It's pretty dang out of the money. And there is a big trade-off too for one big difference between the success token and the index co-op deal is that if you're getting tokens streamed to you, then you can deploy those tokens to DeFi. So like right now you can take your Fox tokens over to Tokamak and get 26% yield. But if you have these success tokens, there's not currently any DeFi strategies where you can earn yield on them. And the whole intention initially with the success token was to make it an especially good deal, an attractive deal for strategic investors that we thought could help the token achieve success. So I think if we want to keep it that structure, and if we want investors to be interested in it, we probably need to go back and revisit the strike price and potentially even the expiration date too. Some of the feedback we got from an investor was that they might actually prefer a later expiration date, trying to plan around the potential bear market.
Yeah, good call. This would be the second round of revisions on the parameters. Is that correct?
Yeah, they actually started kind of closer to this, and then we increased them when Fox was closer to $1, and then now we're back the other direction. So just trying to keep these up to date as the market moves around us.
Yeah, tricky. Cool. So strike price and expiry are the most prominent or the most pressing tweaks.
Yeah, those are the two we need to play with. Here's the current one, and just kind of started. I mean, I'll just share this draft in the Discord if anyone wants to play around with it. I was hoping to be able to spend some time on this today, and then maybe propose some numbers, but did not get around to it today. So,
is the general thought that these should be more at the money?
So the price per success token, the plan was to price each success token around the price of Fox 3 days prior to closing. So, let's say, and we're going to use a TWAP too. So you could say, for example, let's say it's 35 cents. That would be the price per success token. When you buy a success token, you can redeem it for at least 1 Fox at expiration date, and then potentially more Fox, up to 2 Fox, depending on the price of Fox at maturity. So, and that's that strike price. So we probably want to bring down, to make it more compelling, we'd want to bring down the strike price, and then you can see this effective discount. That will increase this effective discount. And what I was realizing is that with the original one, the effective discount that we had, let's put this at, it's not a very good discount considering, especially when you consider the fact that these tokens will be locked up for a while and they won't be able to generate yield in the meantime.
But man, between the discount and then the potential payout, if the price goes up, this is almost like the ultimate investment vehicle if you're a Fox bull.
It's great for these investors that want to go long Fox, but we got to make sure it's compelling to them too, relative to their other options, which are just buying Fox in the open market and then staking it for 26% yield and stuff. So.
That's true. Yeah, that's a competing sort of vehicle of sorts. This is staking. Cool.
I think that's all I got.
The idea is after we revise these, maybe reapproach the interested parties and say, okay, this is where we're at right now, and kind of go from there.
Yeah, I think we need to just look at our 2 options. I also think that'd be another good thing for tokenomics. We have this. I've been sharing just this like index co-op thing for other investors that aren't interested in the success token or would prefer just regular exposure. Or they might not be super strategic investors, so we don't necessarily want to give. We're happy to trade some Fox for stables. We don't necessarily want to give them the ultimate deal. It'd be cool if we could take this and make it just like a 1-pager. It's not focused on the index co-op. Yeah.
With respect to just the general discounts, like along the lines of index co-op, are you of the thought that maybe in this market the discounts need to be larger because investors are more risk averse?
I think these discounts still work because the investors that will be interested in this are investors that are already committed they have a longer time horizon, so they're not planning to dump it in under 24 months anyways, and so the ability for them to make a large order and get a discount on it relative to market, I think is compelling. One question I wanted to ask is this is just based on the spot price at the time of the deal, right? The discount.
That was my understanding.
Yeah. Okay. Cool. And we'll probably, I guess, use like the Chainlink price oracle as the source of truth for that.
I love that we have that Chainlink oracle.
Likewise. Cool. So that's what I got for success token. Unless anyone else has any questions. What else do we have on that agenda?
Water DAO.
Ooh, Water DAO. Yeah, this is really exciting. So if you guys recall the deal that we did with OneHive for shared liquidity, that's been really popular. A lot of other DAOs are interested in doing these like token swaps to then both provide liquidity and have protocol and liquidity that earns fees as opposed to expensive liquidity mining. So the OneHive team, they are planning to launch a new DAO for this. And because there's so much demand for this, then they don't have enough honey tokens to meet this demand. And ShapeShift has the potential to be one of the initial DAOs, one of the launch partners for this. So they're still talking to some other DAOs. I'm trying to find some information that I can share with you guys on the screen. Here's a HackMD doc. So it's all getting fleshed out, but the idea is to launch this DAO and enable projects to apply. ShapeShift, we wouldn't even have to necessarily apply. They've already kind of said we could be one of the first projects here. I think what we would do is we would put up $200,000 worth of Fox, and they would pair it with $200,000 worth of this water token. Water token would also have a big pool on XDAI. This would all be on XDAI, so it'd be building our Fox liquidity on XDAI without expensive liquidity mining. And then other cool projects that would be, I don't know if they have any projects finalized that we can share the names of yet, but there'd be some other, they're trying to get cool projects to also be part of this launch cohort. Those other projects would also put up $200,000 of their own token that would then get paired with $200,000 of water. And you guys might be putting it together now. Water essentially becomes like an index token for all the DAOs that are admitted and that are approved to get shared water liquidity. That's the core idea.
So a DAO, basically a DAO ETF. That is super sexy. Do you have any idea what other DAOs are involved with this at this point?
So right now, I know there's some folks from Gitcoin in the group. There's folks from Opolis, folks from OneHive, folks from Panbala. That's and ShapeShift. That's kind of the core crew that's putting together the initial. That will be the initial governance. I know we're trying to get Gnosis as one of the DAOs to be one of the launch cohort partners. So those are the DAOs that so far I've heard are involved. And then I'm not super involved. I've just been kind of representing ShapeShift on this. They reached out and asked if I want to be involved, and it seems like it'd be really cool. And I think I'm in favor of the DAO being a launch partner for this and taking 200K of our Fox to deposit into a liquidity pool to be paired with water. Then we would also become part of the water governors, basically, and we would have the ability to then decide which new projects get water pools.
Water governor. Sounds like something out of like Dune or something. The water governors. It's a powerful commodity. What will be the next steps on this, Willie?
So I just wanted to share it with you guys, plant the seed. It's moving pretty quickly. I think next steps for us, we could even get kind of proactive and we could approve, either the TMDC could do it or the DAO could approve just taking, allocating Fox from our treasury to this, to deposit into a liquidity pool to be paired with water tokens.
Awesome. Well, thanks for putting that on our radar. It sounds awesome.
You bet. All right, what else? The main thing might skip because the main thing I wanted to share with you guys was just a draft spreadsheet for DAO revenues. I'll share this in the stage. It's very much a rough draft, but I was doing my best to try and just get together all of the existing revenue streams that we currently have coming into the DAO, so that we could see this in one place. Because I know we talked about a dashboard and stuff, but I figured we could just, with this spreadsheet, we could get a good head start and at least have a better idea of the current monthly revenues. So right now, this has our Cosmos validator, our Osmosis validator that just went live, this last program with Ondo and Faye, the toke rewards from Fox, and the toke rewards from our toke. We're also earning some Fox right now from Fox farming. I don't know if we really want to consider that as a revenue stream though, because we're effectively paying ourselves there, and that's obviously not sustainable. So let that over here. And then we have these the Treasury Diversification. This you could also argue that this is revenue, but also not necessarily sustainable unless we're bringing in more Fox. So I kind of kept these in a separate boat too. This is super rough. I was working on it during the Tokenomics hours call. It's just got each of these different revenue streams and a way to calculate revenue for that specific stream, aggregates them. And yeah, we've also got some upcoming revenue streams here too. So yeah, just kind of wanted to share this and would love for a community member to take ownership of this if they're interested, or a work stream to take ownership of this. But yeah, also just wanted to share kind of a high level view of current revenues coming into the DAO.
It's really cool, Willie, to see all this in one place. And I like the way you broke this out. And I'm looking forward to once we have more integrations and rev share agreements similar to Urine, people building into our V2 platform, just getting more and more of those streams built out. And it's easy to imagine, these quickly just, building both in quantity and the amount that like the number of revenue streams we're generating from partners and just the size of those as we build out our presence in the DeFi world, because man, that's such a core part of the meat and potatoes of our tokenomics.
Yeah, thanks for putting this together. Is a question I had is the USDC bonds. We're really selling enough for 1.8 million USDC per month. Like once I assume that's once we increase the max bond size.
Yes, I would love to bring Ron up to speak to that if he's available. But my understanding is that at the current rate, we are acquiring about $1.8 million of USDC per month. Ron, can you confirm or deny that, please?
Yeah, I mean, the current bond is set at 2 million. That's our goal, at least. We may fall a little bit short of that.
And we're planning to do that for every month not forever though, right?
Not in perpetuity. Perpetuity, I guess, is a long time, but we want to certainly because we need more stables. We're going to be continuing that for certainly the next month, and probably for the next 3, 4, 5 months. It's hard to project too far, but a key outcome of the TMDC discussion we just had prior to this meeting is given that we want to accelerate our stablecoin exposure, we're actually going to up that pending TMDC approval to 3 million a month. The market seems to be supporting 2 million, and without any adverse effects. So we could approach OHM and ask them to bump that up to 3 million. That's 100K a day of stablecoins, which is wonderful.
Yeah, that's awesome.
I do think once we hit our goal of, I think it's $10 million of stablecoins, I would support decreasing that, especially with the hope that by that time we'll have additional revenue streams, just to decrease the Fox issuance and stock to flow. But we can right.
Agreed. Yeah, I mean, there may be a point where via other routes, or maybe we just wind up hitting that 10 million from this, but maybe eventually we'll just wind down that particular bond altogether if we're generating enough revenue elsewhere. But for right now, man, this thing is definitely a lifesaver.
And the UST, all the UST that's in our, if you look at the Zapper view of our treasury, there's currently 55K in UST. Did that all come from the Cosmos and Osmosis validator?
I believe just the Cosmos. I don't think that reflected any of the.
Oh, yeah, we haven't had Osmosis validator going yet, right? Yes,
yeah.
Just Cosmos, yeah.
Oh, and that's a good note too. Thank you, Marley, for helping me calculate these. The UST that we currently have in there, we've also spent some of the UST just to reimburse multi-sig signers for gas costs and stuff. So we actually have earned even more UST, but it continues to grow. And I think the Osmosis validator, I expect this to grow now that it's named ShapeShift, but especially once we have Cosmos Osmosis staking live in the V2 app, I expect that we'll see both of these grow even more.
Yeah, it's awesome.
Yeah, another fun fact. Yeah, marketing's working on a press release for the merch store, and they're going to be able to say that just in the past month, ShapeShiftDAO has added 3 new revenue streams with the merch store, the Urine integration, and the Osmosis validator.
Although that Urine integration is not really bringing in anything yet.
Not yet, that's right. But it's a revenue stream.
Yeah,
that we have in place. Yeah.
Totally true.
We're overlooking the most promising revenue stream of all, which is to create NFT ducks. I don't know if you guys saw this. It was on one of the financial sites like Market Watch or whatever, but apparently some couple was about to lose their house. So they created this line of NFT ducks and they raised like, 100K very quickly and paid off their house. So here's to ducks, I suppose. Oh, hey, Willie, I see Tokamak liquidity allocation voting on there. I know you posted a little bit about their revised interface and all that. I don't think I fully grokked it just glancing at it, but it sounds pretty damn interesting.
Yes. Let's chat about that for sure. That is a hot topic. So Tokamak just launched their liquidity allocation voting. So it's pretty cool. Every one single toke, which is right now like $30, directs $424 of liquidity in toke reactors. That's pretty cool. And this Pro dashboard gives toke holders the ability to vote on various pools to allocate Fox liquidity. And the liquidity would be paired. You can see what it would be paired with. So for the Curve pool, they will pair it with TFox. For the Uniswap pool, that would be paired with ETH. And so they'll take ETH from the reactors to pair it with the Fox liquidity. And the DAO has a lot of votes because we've got a ton of toke. So we can come in here and we can vote on which reactor or which liquidity pools we'd like to direct Fox liquidity to. Right now, it's pretty interesting. So they made the defaults for all of the different reactor pools, the Curve pool. So right now, the majority of all liquidity by default will just go to a Fox TFox pool, and that's pretty interesting. TFox, of course, is the what you get when you stake your Fox into a Tokamak reactor. So that's pretty cool. It will enable people to go between Fox and TFox without having to actually stake or unstake. That's cool because right now there's a withdrawal period. You got to wait until the end of the withdrawal period to withdraw your Fox or TFox. And similarly, you don't start earning yield on your Fox until the next epoch. So that's interesting, but I think we probably don't need that much liquidity. So one decision that the DAO can make soon is, and this might even be within the purview of the TMDC, but which of these do we want to vote on? You can see right now, almost all of it is on the Curve pool. The DAO, we have right now like 48,000 votes, maybe probably more once we claim more toke and stake it. So yeah, probably closer to like 50,000 votes. So we could really move the needle, as you can see. So yeah, Ken, what are your initial thoughts? Do you have any thoughts on which pool the DAO should vote for?
I do not. It definitely just makes me glad that we have toke. It's also, thinking about the T assets and adding those to Rari. Let's see here. Just at a glance, gosh, I don't know. It's going to be an interesting decision. But I think it definitely reinforces the notion that it's good to have toke. I would, again, toke has value. We could sell it for stables, but there is some very good rewards from owning toke, and this just makes it more compelling. So I'm looking forward to growing our toke stack over time.
Likewise. Yeah, it's not something we have to decide today, but definitely something for TMDC and Tokenomics Workstream to think about. I kind of like the idea of not allocating it to Uniswap v2, where we currently have pretty strong liquidity, but allocating it either to SushiSwap and or Balancer, so that we could have more liquidity on those dexes. And the cool thing about that is that it will create ARB opportunities between each of these different pools, and that will increase volume in all of the pools, which will then increase the yield for providing liquidity on any of them. So.
Oh, that's a pretty sweet flywheel. ARB leads to more volume, leads to more fees.
Yeah, so that's kind of where my head's at. Is I think either Sushi and or Balancer would make sense, but open to others' thoughts as well.
Awesome.
I see Giant Ken's got a question. It's a great question. For these, there's currently no Fox ETH pool on SushiSwap, and that's a good question. I don't know if we'll have to go deploy that pool, or it'd be awesome if Tokamak would deploy these pools for us, because then that's another argument to vote to at least have some allocated there, because then they'll cover the gas fees to deploy the pools, which is not cheap. Cool. I hear someone's keyboard. I think it's Josh. Josh, we hear you typing.
Oh man, I wasn't muted. All right, I'll see you guys. I gotta go.
Bye, Josh. Have a good one.
Thank you.
Cool. I see we're far over time, so these last two topics that we had on the agenda, I can hopefully these are